Is a boat owner's insurance valid when a boat is hauled out?
Probably not.
How many boats do you underwrite every year at Oversea Insurance?
Between 500 and 1,000.
So, what's the smallest boat value that you've covered?
Jet ski, 5,000.
And the highest?
100-meter.
Hi, everyone, and welcome back to Full Displacement, the podcast by Current Yachts. We are here today to talk again about yacht insurance, such a spicy topic that comes up a lot, sometimes blamed for the cost of owning a boat and the rising cost in particular. So today we've invited John Jarvie, he's a principal at Oversea Insurance, to share some of his lessons learned over the years, as well as address in more specific details the very common sticky points that buyers have to work through as they come to owning a boat. So with this, welcome back, Amanda Haley, to the show. How are you, Amanda, today?
Very good in Placencia, Belize. Enjoying the beautiful weather here.
Sounds great. Without further delay, welcome, John. How are you today?
Hi, thanks for having me. I'm doing wonderful. It's a pleasure to be here.
How was the Palm Beach Boat Show for you, John?
It was good. Just finished the boat show last week. I had an opportunity to meet with various insurers, some new markets that have recently launched, and connect with some customers. So it's always a good boat show.
It is a great boat show, definitely a favorite for a lot of our clients, too. So I guess we'll start with your background, John. How long have you been in marine insurance? Are you a boater? Tell us more about you.
I've been in marine insurance for about 20 years. It's basically the only job I've ever had, which is a good thing when we're talking about boat insurance. Very, very skilled at this single siloed specialty of boat insurance. My grandfather started the business over 50 years ago. Very fortunate to work with my father in San Diego, where I'm from. And I moved out to Fort Lauderdale in 2009 to open our office here at the Bahia Mar Yachting Center, where I'm sitting right now. And I grew up boating, grew up hanging out on my dad's boats, my grandfather's boats. My first boat was a 34-foot Catalina sailboat in San Diego that I actually lived on for about a year. And most recently was a 34 Grady White 336 Canyon that I sold last summer. I too am scared of hurricane season, and I'm in the market to purchase another boat now.
Great. John, are you already working with a broker to help you with your search?
I am, as you can imagine, I know lots of brokers, and but I'm still kind of zooming in on the boat that I want first, and then I'll connect with some friends and find somebody to help me buy it.
That's awesome.
How would you say is the overall insurance market at this moment in time? Are rates going up or going down? Are there more or less boat insurance companies than there were 5 years ago? And why?
I would say that the market right now today is softening. Softening, we use that term in the insurance space, meaning rates theoretically are going down. Insurers are a little bit more flexible. Everybody's kind of in growth mode. Every company is asking us for more business, which means they're hungry. They're making exceptions in areas where they historically would not. And we're also, as I mentioned, seeing
Okay.
some new insurers come into the market. So, as you may recall, being boaters, um, the softest boat insurance market ever was leading up to 2017. We had those three hurricanes, right? Maria, Harvey, and Irma. And that wiped out maybe
Yep.
80% of the boat insurance industry. The companies didn't go out of business. They just said, what the heck are we doing insuring boats? It's hard to make money. And so we had a withdrawal of most insurers, frankly, especially in the market under, call it 60, 80 feet. And in the last 5 years, we've slowly but surely added markets back. Those are markets that package other assets that you've heard of, but also markets that only insure boats and have come into, hopefully for their sake, be a force in the boat insurance space. But that competition is ultimately a very good thing for the boat owner.
And I got a clarifying question on this. Here we're mentioning the presence of carriers, those who underwrite insurance. and then you are a specialty broker that brings carriers and match carriers with boat owners, correct?
Yeah, that's correct. We're not the individuals paying out claims. Those are from the checkbooks of the actual insurance companies. So you hear that term insurer, carrier, underwriter, that's all on the insurance company side of the house. We are agents, brokers. Those terms are different, but they are used interchangeably where we represent various insurance companies as opposed to just one insurer.
And so the questions that comes up a lot, especially when people grow into larger vessels, do you really need a marine insurance specialist, or can you just go through a homeowner's agents, say State Farm or Travelers? Why would I need a specialist? Tell us about that.
Well, I should probably clarify. So we insure over 10,000 boats worldwide. So in the last week, we've insured a $75,000 boat and a $75 million boat. So the answers I'm going to give probably will be more tailored to boats under $1 million here, because a very common answer in my world is it depends. But I don't want to answer every question with it depends. So I'll try not to. The larger the boat, obviously, the more helpful it can be to have a specialist. But in most cases, a marine insurance specialist, it doesn't cost you any more money to work with them versus a generic homeowners or auto insurance broker. In most cases, a marine insurance broker has access to more marine insurers than a generalist insurance agent or broker. And 9 times out of 10, if you're working with an experienced specialist, they are a great deal of help, not just during the quoting and underwriting process, but all the way through the lifeline of the insurance policy. And God forbid if there's a claim. The relationships that marine insurance brokers have with insurers usually run pretty deep. And even though it shouldn't work this way, most things in life are subjective. And so it is entirely possible that two different brokers submit the same risk to the same insurer and get two different outcomes. Now, an insurer cannot give agent A one price and agent B a different price if you're talking about the same exposure, but agent A might get a declination from Chubb, where agent B might not, because either because they have a stronger relationship or in fact they have a better opportunity to actually paint a picture and in fact sell it to the insurer and explain why this insurance company would want to insure this boat instead of just sending a generic email or submission. This company declined. Sorry, we couldn't help you. But it takes a lot of reps to know that this particular insurer, I know that they can insure this boat. They've done it for me before. I know for a fact they have the ability where that might not be held completely equally if just any general agent made that same submission.
We
And I
have
can speak to that personally myself, since Brian Rasmussen is one of your agents and is my insurance broker. He tailor-made a specific policy to me as someone who would be staying on my boat majority of the time in South Florida, which is the prime hurricane zone, and was able to make that policy so that I could be able to use the boat and go further offshore because I knew I would wanted to at certain times. So working with a specialist, telling him how I plan to use the boats, and sometimes he suggested that I would just have a rider for the times I wanted to go to the Bahamas. So it is very valuable, and I unfortunately did have a claim, and we can get to this later, an unfortunate one where my boat burnt to a crisp because of a shore power arc, and Brian was there, your agent, every step along the way to walk me through the claims process, the outcome of it all. Most importantly, to make sure that I was protected from the beginning, not after the fact. So that leads me to my next question. Does the insurance agent that you choose play any part in the claims process and or the outcome?
Good question. And they should, but depending on the agent, very few agents have a lot of experience with marine claims. And so there is kind of a dotted line that an agent can follow to assist with a claim. And as long as most of it is relatively straightforward and the insurer does what they're supposed to do and the boat owner does what they're supposed to do, an agent can and should be directly involved in a claims process. At least at our agency, when claims get complicated or expensive, or there's a severe injury or potential that the claim might not be covered, it usually will get passed up to me. I'm surprised, frankly, your total loss didn't get passed up to me, but Brian must have done a fantastic
It
job.
was a very cheap boat. It was a very cheap boat. That's probably.
But, in a claim scenario, depending on the type of loss, so first of all, what helps as an agent is to know how the claims process works and if there's a likelihood of a declination from an insurer, or if it's a pretty straightforward, we got struck by lightning, here's your lightning deductible, here's your payout. But when it can get complicated or in areas where there may not be coverage, like mechanical breakdown gets complicated with machinery, electronics claims can get complicated, injury claims for sure. And the insurance companies, they assign a surveyor, right? And there's about more or less a dozen marine surveyors that work specifically for insurers. And even though the insurer is paying that surveyor, the surveyor works for the boat owner, but also works for the insurer. It's a little bit of a conflict, but in theory, they are also representing the boat owner's interests. That surveyor is going to have an opinion. That opinion is very valuable opinion because that becomes the gospel of the way the insurance company underwrites the payout for the claim. We've had it. I mean, we had an example where this was about 10 years ago, where there was a claim in Mexico in one of our boats in Baja California. And the surveyor visited the boat and said that the propellers were corroded, deteriorated, and are probably only worth about 20% of the full replacement value. Now, that was not a full new for old policy, so there was depreciation in the policy. And so the insurance company sitting in their ivory tower looks at the report and says, okay, we're going to give you 20% of the value of a new propeller. We actually flew down to Mexico because I saw pictures of this propeller, got it, flew it back, brought it to the insurer's desk, the head underwriter's desk, and said, tell me this is 80% deteriorated. It wasn't. And that's not because the surveyor was out to get anybody. He might have had 5 claim reports to do that day, and he was just moving right along. And when the surveyor gives an opinion, if we like their opinion, then your agent doesn't need to do much. But if we don't like their opinion, you have 2 choices. You can hire your own independent surveyor, or in some cases, a maritime attorney. But you don't always want to put the boxing gloves on at the onset with an insurer. It can kind of put them on their heels. But also, your agent, that's where your agent can get involved and put up a fight with the insurer on your behalf without having to hire an attorney or a surveyor or any third party to represent your interest. But you have to be an experienced agent that knows how it should go under the best circumstances, because there are times when a client will argue, this should be paid. Why is that excluded? Why is that depreciated? And I side with the insurer because they're right. But if the insurer is not right, you also have to know when to go up against them and to lobby for your client. And I'll be the first guy to say, hey, it's time to get an attorney. Here's why. Here's what we're going to do with it. And I'll also say, you're going to waste your money if you hire anybody to support your case, because I've seen this claim 100 times and there's nothing you can do to get it paid or get it further paid than what is depreciated. But that was a scenario where we ended up getting that depreciation flipped. So they depreciated the propellers 20% instead of 80%. But the insurer's just looking at a report the surveyor gives them. They're not trying to hurt anybody, but it all comes down to what the surveyor's opinion is on the day.
So, John, you were just talking about the fact that you have surveyors involved when there's partial losses, for example, or even total loss, right?
Absolutely.
Do you, as a broker, have any input into who that surveyor is, or is that strictly at the discretion of the carrier?
Good question. We absolutely can give suggestions depending on the type of loss. So if it's a fire, for example, versus a grounding, fire claim, you're going to want a specific type of surveyor. But normally, with the right insurers, they know the right teams to call. And so they'll generally have the surveyor attend with a fire expert, perhaps even somebody from the fire department, perhaps even somebody who manufactured the component that caught fire, if we know the cause of the claim at the onset. But in general, yes, the agent absolutely can recommend surveyors. And if there's a surveyor appointed who maybe we've worked with and we've seen their mastery and we don't love it, we can get in front of that at the onset. They don't always agree, but if you get involved early enough, you can have some sway there.
So to your earlier point, even more critical to have a specialist working, on your behalf in your corner, because this is the kind of situation that as a private boat owner, you will have no sway over. But if you have an insurance broker whose specialty is marine insurance and has experience with these situations, you can see how all of a sudden there's a lot more power on your side. So we started talking about how things can get really complicated. And so I wanted to understand from your perspective, what are you seeing? What's changing in the way boats are insured alongside changes in boats? So complexities such as, lithium battery, hydrofoil boats, carbon fiber materials, and then also even AI integration, electronics getting more complicated. Are insurance carriers proactive or reactive to these changes?
Recreational marine or boat insurance carriers are absolutely reactive. Nobody wants to be the first one to learn how to insure lithium batteries or hydrofoil boats or anything. I mean, it's hard enough to make money as a marine insurer, even when the wind doesn't blow and the rain doesn't fall and everything's perfect. It's hard to be profitable, and we need them to be profitable if they're going to stay in the business. But if you think about cars, when Tesla came in, electric cars came in, every insurer was figuring out a way to insure these cars because they had to. In the marine space, when you get new technology or different configurations of engines or vessel material, the manufacturing material, like carbon fiber or composite materials, there are the majority of insurers, at least at the onset, will say, we don't insure those. I remember when, a twin outboard boat used to be daunting to an insurer. And then they all got on board with the twin outboards, and then we had 3 and 4 and now quint and even 6 outboards.
Yeah, that's insane.
So yeah, at each level, and that's nothing fancy technology wise, we're just adding more outboards, which we already understand and can underwrite. But there's a fear. There's a couple of the largest insurers in the country that only started doing quad outboard boats in the last couple of months. With 5 and 6 outboards, there's still a very limited market. So at the onset, you need to find kind of even more specialty underwriters within the marine space to do things like carbon fiber or electric power or lithium battery. And then as it gets proven, because even the lithium space, I mean, geez, in 2023, we paid out somewhere around $30 million in lithium fire claims. Or I should say, we represented the payout of about 30 million. In 2025, maybe 4 million. So the technology improves. In their eyes, there is no motivation to be first to market while we test these things. And so as the technology is a little bit more proven, you get the more common, well-known insurers saying, okay, I'll do that now.
That's a really interesting dynamic there to say, hey, nobody knows how this is going to go when something is first out there. And your numbers are very real and true. I wouldn't either if I was the insurance company. I'd wait to see how it goes.
And since you spoke earlier about providing support, finding coverage for larger yachts, can you speak to cyber attacks and risks? Any spike in these recently or not an issue?
Cyber is an interesting one. It encompasses a lot of different exposures. So, cyber could be we hacked the owner's email or bank account from his laptop on board. Cyber could be we hacked into the vessel's actual computer system and took control of the boat, whether we are not allowing the boat to power on, whether we're changing the course of a vessel underway. And cyber relates to both property coverage and liability coverage. So most policies, if not all, have a straight exclusion for cyber.
Really?
And so, yeah, it's a really difficult coverage for an insurer to get their arms around. There are some supplements that you can purchase where you have your yacht policy here that excludes cyber, and you can go purchase a cyber policy separately for your boat. It's a rather new product in the boating world, but generally that product costs more than the yacht insurance policy itself. So I've never sold one. I've been asked to quote it, but nobody wants to buy it because it's expensive. I think eventually you might find a way to build it into the yacht policy itself for an additional premium, but there's a very, very big exposure there. We have seen some instances of hacking on big boats and small boats into personal data, crew data, owner information, banking information, things like that, but haven't been able to file any claims for it. And then on the larger boats and even the commercial boats, we've seen a lot more threat of, ignition just started while we were at the dock and still tied down to the cleats. And in a rare occasion, they did take over the vessel's autopilot while underway. So these are massive concerns. Obviously, the cyber world, land-based and water-based, is a big area of concern, but the marine insurance space hasn't totally figured out how to underwrite it for boaters. Because you have these other exposures too. You can have one of your crew members, you go down to the Bahamas for a weekend, your captain gets off the boat, shares the Wi-Fi password with a friend he meets at the bar, and now you got a stranger into your boat's Wi-Fi. So it's really hard to keep a net around everything when these water-based exposures are on the water but can easily creep onto land. Whereas, Bank of America, we know where their buildings are.
Very interesting. We might have a dedicated episode on that soon. Great. Moving on. Next question, Amanda. What'd you have for John?
Yes. So we had an instance happen just recently on a boat that we were going to survey on, but I wanted to hear your thoughts first. Are boat insurance policies permissive use, like on a car, where if your friend comes into town, they get to drive your car and they're covered? Or do operators need to be approved by the underwriter?
I said at the beginning I was going to try not to say it depends, but I'll use it here quickly. It does depend. And I know it's complicated when every insurance policy is different. Every insurer has different language, but it is both. So typically, when you get into larger boats, call it over 50 feet, you can have a more common frequency of named operator, which means unlike our cars, if I give Amanda the keys to my car, she has my permission to go to the grocery store. The same can be true for a boat. What you find most often is areas of windstorm, of areas of higher concern, like the Southeast USA, more common to have a named operator policy. The Northeast or the Great Lakes or Southern California, where I'm from, it's usually permissive use, even on larger boats. So it does depend on the insurer, absolutely. But it also depends on the owner's experience. So an experienced owner generally knows not to give the keys to their cousin who's never run a boat before.
Right.
A newer boater, it's more common, or either a newer boater who hasn't owned a boat before, or you're going from a 30-footer to a 60-footer, and we got a big jump in size. That individual owner will usually see a permissive use type of clause or provision on there until they get comfortable with owning a boat of that size, and then you can see it fall off.
Interesting. Yeah, in this case, the boat was going to survey. A hired captain was hired to bring the boat to the survey, and during that time, the boat hit a bridge and the mast fell down. And the insurance company denied the claim because that operator, that captain who was delivering the vessel, wasn't a named operator on the policy.
Yep, that's exactly right. And it's rather straightforward, but the important part is that the owner knows it's there. And we as agents, we're not the police. We don't know that Amanda's always the person driving her boat. but we trust that you are if you say you are. And we really don't know what's happening until there's a claim. And that's when they open up the file and say, where was the boat and who was driving? And if you say, we were in Cuba, well, hey, you're not covered for Cuba. I didn't know you were going there. You didn't tell me. You didn't tell me Mary Line was driving the boat that day. But I know that boating can be tricky too, because a lot happens outside of Monday to Friday, 9 to 5. And you need a captain to run your boat up to the shipyard on a Sunday so that you can do a Monday haul out. You really can't get the operator approved in most cases. It does take a little bit of foresight. And the other thing you can do is you can kind of preload your policy with, hey, here's 4 people that might drive my boat this year. And granted, you'd need one of them to be available, but you can pre-underwrite that if you are thinking forward enough. But if not, that does happen from time to time. And again, we don't always know about it. But if you have a named operator policy, that's an important provision to know about. And it's usually on the first or second page. It's usually on the quote. It's not something that's buried on page 28 that you would have no idea about, but it's always worth double checking.
And in this particular case, would you imagine that the owners of the vessel have a recourse to go directly after this captain, or is it just their fault and therefore they're out of luck? What do you think is going to happen there? Just really curious.
Yeah, that's a tricky one. That's a great question. There are something that an owner can do is there are captain insurance policies out there, captain's liability. They're not actually very expensive. Most captains don't carry it, but some do, where you can actually make sure that your captain has $1 million of negligence liability insurance should something like that occur. But the owner would usually need to bring it up. Now, the captain would typically say, well, don't you have insurance? Yes, I do, but I don't want to be the first line of defense. And the owner's policy will also have a deductible that the owner will likely have to pay. Now, to go after a captain because they caused a loss, if there was no negligence, the captain wasn't drinking, he was following the rules, and there was an unmarked
Bridge?
palm tree. The bridge is a little bit more marked traditionally. I would say there's negligence there. But for an owner to actually pursue them legally, it depends on what the damages are, because if the insurance policy pays, there's theoretically minimal damages other than maybe the deductible and the resale value. But if the insurance policy doesn't pay, the captain could easily turn around to the owner and say, that's your insurance policy. You gave me permission to drive the boat.
Yeah,
I
that's fair.
assumed you had the insurance company's permission. That's usually what we see happen.
Okay, thank you for that. So, digging into some of those buyer pain points now, my first question for you in that area of very specific clarifications or understanding that we wanted to have your take on. Are boats typically covered when they're getting worked on at a shipyard or if they are being hauled out? What should a owner be aware of in that circumstance? Now we know about named operators and paying attention to that. What else should we know about for this circumstance, boats being worked on or hauled out?
This might be the most important question that you ask today. And so I'm guessing that the answer I'm about to give, neither of you have heard before. Most owners don't know, most insurance brokers don't know, most yacht brokers, most captains. So it is perfectly legal for a shipyard to absolve themselves of any liability, even if it's their fault, while your boat is at their boatyard. The insurance policy, a boat insurance policy, covers every boat to be maintained, hauled out, worked on, with some provisions. If you're doing more higher exposure work like welding, what we call hot work, yeah, you need to get approval for something like that. If there's a fire because of a weld or something, the insurer needs to underwrite that. But if you're getting out for a bottom paint, for zincs, for a short haul, for a survey, or for a 6-month refit, just about every shipyard in the country gives you a work order. Now, sometimes that's a 2-page work order, sometimes it's 15 pages. But in that work order, there usually are one of 3, if not all 3 things: a limitation of liability, a hold harmless, and a waiver of subrogation, which means, number one, if we're hauling your boat out and the strap breaks and we drop your boat on the concrete, you'll hold us harmless, even though it's our strap, our lift, our shipyard, and you paid us. You will limit all liability and you'll waive subrogation. So where it can interfere with your boat insurance policy is you're allowed to get hauled out, you're allowed to get worked on, but there's something called subrogation in insurance, which means that your insurer pays and then they go after the insurance of the at fault party, right? So imagine you hire an electrician and you sign a contract with the electrician that says, if you burn my boat down, I won't hold you at fault. He burns your boat down because of some faulty work that the electrician did. Your insurance company will not pay that claim because we've interrupted their ability to recover. So your insurer cannot go get their money back from the party that should have paid in the first place. But because we held them harmless, your insurance policy basically is void. And so this is important because anytime a boater is hauling out at a boatyard, we're signing language that basically voids our policy. And so, yes, we're allowed to haul out as long as that language isn't in there, but it is. And so, if you don't know to look for it and you're only looking at the first page of the work order that says bottom paint, zincs, prop speed, whatever, you didn't even know to look at page 4. And in many cases, you're not telling your agent, you're not sending them a copy of the contract, and hey, I just got hauled out for bottom paint, my boat dropped. What do you mean there's a problem? And so this is a big hole in our industry. It hasn't been exploited much because there haven't been massive cases. I mean, I know of a few that we've been involved in and been called as expert witness in. Probably the polar bear case would be an easy one that anybody could Google. A $20 million boat that caught fire in San Diego, I don't know, 10 years ago as a big one. But there haven't been enough landmark cases for the industry to really be aware of this. And because the boatyards are allowed to put this language in there, why wouldn't you? If I could put language in my services that said, if I mess up and you're not covered on your insurance policy, you're not going to hold me liable. Who doesn't like that?
So hold on, John. Let me put this into very simple words. What we've just discovered is that there's a massive void for when boats are being worked on, because the minute we agree to a work order, in the same breath, we agree to all these 3 statements, generally 3, that provide a loophole and that the yard is taking no responsibility should something occur. And in the same minute, it voids our insurance on the boat.
Yeah, in theory, yes. Now, a boatyard will tell you, hey, look, if we mess something up, of course we're going to fix it. I've seen enough examples where that's not the case. And if that's the situation, then why does your contract say this?
Right.
Why
Why
don't we
would you put
just
the language
remove
if
it?
you don't really mean it? Okay.
Right. And so what does a boater do? So what am I supposed to do then? I need to haul my boat out. We need to get it surveyed. We need to get it painted. So what am I supposed to do? You're supposed to tell your agent. The agent is supposed to tell the insurer, and you get their approval. The problem is, as you can imagine, the insurance companies don't want to pick up the shipyard's exposure. We don't know how often they drug test their employees. When was their boat lift straps last examined and surveyed? We're basically being asked to insure the boatyard's liability without being able to underwrite it. So are we supposed to charge a premium for that? Are we just supposed to say, okay, no problem, Mr. Jones, you're approved? So depending on the insurer that you have, some insurance companies say, under no circumstances are you allowed to sign anything. We recommend you talk to your attorney, which isn't fair because it's a catch-22. If you don't sign it, you don't get hauled out. Your attorney's going to call them and say, hey, waive this language. And they're going to say, no, go to a different boatyard. But the next boatyard has the same language. But there are some insurance companies, probably the majority, that know how to underwrite around this. Sometimes they charge a premium, sometimes they don't, or sometimes they add a unique endorsement that basically says, look, we'll approve this and we'll cover these exposures, but we're going to cover our faults. They need to cover theirs. And it can, I've spent weeks working on single boat haul out contracts back and forth with an insurer to get it properly approved. The other thing that happens is we usually get the contract after it's been signed. So we don't really have an opportunity to negotiate terms because the owner's already signed it. So it's a big problem. But again, to have a specialist that knows what to do when you tell them I'm hauling the boat out and knows how that can impact your policy. It really frustrates boaters because they go, well, aren't I insured to be hauled out and worked on? Yes, you are, as
It's
long as you don't
insane.
sign that language. So it's a major issue. Most boats hauled out at any boatyard at any time didn't tell their insurer. So the boatyards usually tell me, hey, no one else here has a problem except for your clients, John. That's because I know what to do with it. And my clients tell me they're hauling out. There aren't enough hours in the day for me to handle every haul out contract for all of our clients, but I only know about the ones that tell me. And so we have to do something about that. Now, there are smaller boatyards, mom and pop yards that sometimes they just have a one-page napkin contract. That's best case for a boater. Certainly none in South Florida. Depending where you are geographically, that does change, but it is something that boaters need to be aware of. Ask your agent about it. If they don't know anything about it, ask a different agent.
Very good
So
point.
that brings up a specific question. There are a lot of marine service technicians in the area, and I've spoken to a few of them. And in order to work in some of these yards, they have to carry $1 million liability policy, which is like, well, if the yard isn't taking responsibility, are they then putting the liability onto the technician? Are they just skirting it and requiring that any technician that comes and works on the yard has to carry this kind of policy?
Yeah, good question. So I'm not a commercial expert, but I'll tell you what I know on this topic. There are some boatyards that even require as much as $5 million of liability now. They continue to raise that threshold, which basically prices some of these contractors out where the insurance is too expensive to buy 5 million. So I just can't do business at this boatyard, which is unfortunate. But the boatyard can make those rules and requirements how they see fit. And then depending on the boatyard, some boatyards, as you may know, are full service yards where they manage all of the staff and contractors and technicians who work on the boats. And there are other boatyards that basically call themselves landlords. We're just a facility. We don't employ anybody that works on any boat. We're just a haul, block, and launch facility. And we pass all of that on to the contractors. And those are the ones where I usually say, then why the heck do you have all this language in there if all we're doing is hauling, blocking, and launching? But yes, as an owner, you generally should double check that the contractors you're working with have insurance in the first place. Most boat yards are pretty good about making sure contractors have insurance before they enter the yard. But that gate and that gatekeeper is only as good as their experience. Someone might show somebody a car insurance policy and they go, sure, come on in, you've got insurance. So it's complicated for a lot of these boatyards to have an actual expert up at the front of the parking lot to say, yes, this is exactly what we need. But they have gotten a lot better at it.
And so that is why most marinas facilities will require a contractor sign in, right? Before a contractor comes on your boat, they have to go by the marina office and check in. Okay.
Yeah.
Good point.
But this is boating. It's old school. There's sometimes a back door as well as a front door into a facility.
Great. So I wanted to go into a few specific scenarios here, things that we hear a lot. We discussed in a prior episode the difference between actual cash value and agreed value. So when it comes to coverage of the boat and the scenario of a total loss, in this case, let's imagine it's a 10-year-old boat. The purchase price was, say, $500,000. And after 3 years of ownership, there's a situation with a total loss. Can you tell us in as few words as possible how the two scenarios would compare and what will be the outcome for that boat owner, whether it's actual cash value or agreed value?
Sure. So the first component is total versus partial loss. Total losses, in most cases, you get the stated value on the policy itself. So let's just talk in terms of partial loss here. So if you have a ACV, an actual cash value policy, or sometimes if you don't, you can have a replacement cost policy, but there is a separate provision for sails, rigging, spars, outboard motors, canvas, things like that, where, hey, I thought I had a replacement cost agreed value policy. Well, you do, except for these 5 things. So it's important to note that. So the actual damage sustained depends on, is it one of these things which we're depreciating? Again, even on an agreed value policy. But on an ACV policy, insurer dependent. So there are some insurers that state an actual depreciation schedule. So for outboard motors, we'll depreciate at 10% per year. Well, what does that mean? That means after 10 years, there's zero value left in the eyes of the insurance company. So you need to look at how old your boat is, what age it is, and what that depreciation schedule is. Because if you buy a 10-year-old boat, you might already have depreciated everything away per the schedule on the policy. Now, on the other hand, that example I gave earlier about the depreciated propeller or the corroded propeller, some of these things are in the eye of the beholder, where there actually is not a depreciation schedule and it just says it's actual cash value. In some cases, that's to the client's benefit. In some cases, it isn't. But it really depends on obviously the loss itself, but the opinion of the surveyor. And so that's where you might need to get a second opinion, either another surveyor or an actual expert in that particular component to say, hey, how worn is this? Is it 60%? Is it 20%? And there's always an opportunity to state your case to an insurer if you disagree with their calculation and their logic. But it is absolutely a vague moving target if there is no firm depreciation schedule. But again, I think that works to the client's advantage.
And so what you end up doing is you're running the math, right? So if you have a depreciation schedule, you might get into total loss territory. Is that how it works? You just evaluate both scenarios depending on what actually happened to the vessel?
Yeah, I mean, for any claim, an insurer will pay the lesser of what it costs to fix it or to write a check. And you can have partial losses, absolutely, that turn into total losses because it would just be so expensive to repair this boat back to the way it was. But when you're talking about ACV policies, you can have circumstances where an owner will replace all of the electronics, but nothing else. Lightning strike is probably the biggest, because now these, the boats used to be the Black Pearl, right? Captain Jack Sparrow is a wooden boat. If it gets struck by lightning, everything still works. But now the boats are so computerized, everything talks to each other. Can't even start the engines without all of the systems properly functioning. And we had a lightning strike last year. This was an individual, it was an 82-footer. He had the opportunity to buy a depreciation policy or an agreed value policy. And if it was agreed value, it would have been a total loss because of the cost to repair. Because he took the actual cash value policy, this was about $1 million boat. It was about just over $1 million of repairs, but I think he got about 350,000 out of it because it was a 20-year-old boat and everything was original. And so they depreciate everything appropriately. So no lawsuit, no fight. This is what's left over. And so as a result, he got paid 350 or so and had to make the rest of the repairs out of pocket.
So I think we can skip through 3 and 4 because we pretty much cover that. Very good. So next, I wanted to talk about the Liveaboard coverage questions. We know Liveaboards can get coverage. There's this misunderstanding sometimes that you cannot get it, but actually there are just restrictions to work with. And I wanted for you to tell us what you're finding in the market today and what are some of the limitations? What are some of the things that people need to know about ahead of time? Because we talk to a lot of dreamers that have this plan in, say, a year or two to become liveaboards. And assuming they still find marinas or facilities to support that plan, or as we call it, long-term transient. What are you finding, John, in the space of insurance today?
Long-term transient, I like that. Yeah, you make a great point. There, a lot of marinas are getting stricter about liveaboards as well. So you have to make sure that you have a slip at a marina that will accommodate that for you, because marinas have cranked down on that quite a bit. But from an insurance perspective, again, there are some insurers that are completely comfortable with liveaboards. There are some insurers which are not. Everything's got to kind of fit into a box. So, if you happen to buy a boat that is over a certain amount of years, or it's under or over a certain value, you might not actually be fitting in the guidelines of the insurers who are comfortable with liveaboards. So it's probably 25% of the market, the insurance market, that will accommodate a liveaboard scenario, as long as the boat you're buying is also within their appetite as underwriters.
So could you perhaps share an example of like the typical trap where 25% of carriers will actually shy away from liveaboard policies. What kind of specifics on these boats are you finding make it super difficult to achieve?
Well, traditionally, what we see is there's two types of boats. I'm of course generalizing here. There's two types of boats where you see liveaboards. Very old, neglected, floating houses that are still floating, so I don't need to do any work to them. And so the boat itself is already a difficult risk to insure. And on the other hand, a couple that wants to do the Great Loop on their new Nordhaven or Grand Banks or Fleming, and we're going to live on this boat for the next 2 years and actually be transient on it. We're not a stationary boat. We're going to be moving, but now we're talking about a 2, 3, 5, $6 million boat that isn't quite the same type of liveaboard as this is my house and we're going to be fixed at this marina. So the larger, more expensive boats, traditionally you have more markets for, you have more accommodations. But for the vessels that are tend to be a little bit older, it's mostly condition based, right?
Okay.
So as always, there'll be a survey requirement. And as long as we can comply with the recommendation list on that survey, generally one of the three or four insurers can accommodate, depending where we are. So in South Florida, there seem to be far less liveaboards here than, for example, Southern California. But fortunately, there's a lot more markets in Southern California. There aren't a lot of carriers available in South Florida to begin with. So you're
Is
losing
that because
the
of the hurricane risk, John, generally?
primarily, yes. Primarily, yes. There's a couple of other exposures we worry about down here, but primarily it is the windstorm exposure. But the other side of it is, do you have an actual home, or is this your home? Are you using the boat commercially? Like, hey, this is our liveaboard. But if we get a charter or an Airbnb or an overnight request, we're going to rent it out and we'll find somewhere else to stay. So when you add a charter or a commercial component, that can make it a little bit more complicated as well. But for the most part, we find that liveaboards are perfectly insurable as long as the boat is in good condition, as it would need to be, even if it wasn't a liveaboard.
Okay, really good stuff. What about other scenarios for older boat coverage? So assume here not strictly liveaboard, but is there a cutoff where, I don't know, after 30 years, it's just you're self-insured? That means you have no insurance and you're on your own. What do you find are options for maybe some of those classic boats? And what are you finding in today's market? Let's talk about right now.
Yeah, so when you have the classic market, you can have a 30-year-old 40-meter Fed ship. You can also have a 50-year-old wooden Chris Craft, and you can also have a 30, 40-year-old 60-foot Hatteras, right? Those are
Yep.
all kind
Yep.
of in this same category. So the Fed ship will be just fine. So we don't need to touch on that. They'll be fine. Um, but for the older wooden boats are in a different category than just, let's say, the older boats. So the older wooden boats, there's nothing wrong with them. There are fewer insurers that are comfortable with wooden boats, but there are a few areas where an owner can make sure that they're buying a quality wooden boat. Why don't we like wooden boats? I don't mind them, to be clear. I love the Chris Craft and the Hacker Craft and the Stand Craft and all those classic boats. But it's the degradation of the wood itself. And so when we're buying a wooden boat, insurers require that we pull the fasteners, these plugs in the vessel itself. And that gives us an idea of the actual quality of the core of the wood, the construction, and the condition, the current condition of the boat. So if the fasteners come out clean and the boat's in good shape, you don't really have too much of a problem, presuming, again, it fits in the box of some of the insurers that will do wooden boats. Same is true for non-wooden boats as you get to the 20, 30, 40-year mark. So some insurers have a 20-year cutoff. Some of them it's 30. Some of them it's 40. For the most part, there's almost always an insurer out there. If you bought a 1960 boat, there might be one market. You're not going to get 10 quotes, but you can still get insurance. But when you get into that 20 to 40-year-old boat range, regardless of the type or manufacturer of fiberglass, metal, or wood, it's very slim. The market is very slim. Again, it always comes down to the condition of the boat, the survey report, and the qualifications of the owner. Are we buying a 60-year-old 60-foot boat and we've never owned a boat? Or are we an experienced boater who's, haven't had a claim or haven't had many claims and we're buying a 60-footer? It shouldn't be as much of a problem. But there are, similar to how there are collector car insurers, there are kind of these collector boat insurers as well.
So, assuming we're not in the collector boat category, we're just in the very old boat category, are there situations where it makes sense? And is it available to just get liability coverage in those cases?
Yeah, absolutely. I mean, you can be an 80-footer and just get liability. Yeah, because you at least need to get in and out of various marinas and facilities to prove that you have insurance. But that's most often what we find is liability only policies for those types of boats. Especially if the value of the boat is under, say, 50,000, the owner generally is willing to take some risk on the property insurance and go liability only. You can generally get about $1 million of liability for about $1,000. It's not very expensive. The liability is the cheapest expense within a boat policy. So liability only is pretty straightforward. Some insurers don't even require a survey for liability only, depending on the boat.
Very good. Can we talk about other specifics then for my buyer pain points? What are you seeing in Caribbean and Bahamas coverage? Do premiums go up in those regions? And if so, why? And what are you finding again in today's market? What is very new or unknown to most boat buyers that are discovering buying a boat and insuring a boat in those markets? If you want to spend part of the time cruising the Bahamas, for example, what should you know?
Okay. Good question. So there are some insurers that will only cover you in the United States, but most insurance companies can add a rider and endorsement for the Bahamas, for the Caribbean. Getting Bahamas coverage is not very difficult, is not very expensive during the winter season. Getting Caribbean coverage during the winter season depends on the owner's experience and their familiarity with those waters. But also, what insurers are more concerned with is we're going to take our boat down to the British Virgin Islands in December, and we're going to leave it there till April, and we're going to be back in Chicago where we live. It's not so much that your boat is in the Caribbean, it's that you're not there with it. And so, depending on your caretaker arrangements, maybe you have a captain or a crew, or maybe you're going to stay on board it, or you have a caretaker plan while the boat's down there. But that's more of the concern than being just in the Caribbean. Typically, that is coverage that a boater can get. The summer season is a very different story. So there are almost no insurance companies for boats under, let's call it $5 million in value, that can get windstorm coverage in the Bahamas or Caribbean today. There are almost no insurers that you've heard of. And even for the most part, Lloyd's. I mean, our fallback insurer, if something gets tricky, we go to Lloyd's. Even Lloyd's won't give you wind in the Bahamas or Caribbean. So what do? You either have to bring your boat back to Florida for a storm, or further north, of course, or you have to self-insure for the wind exposure and just say, hey, if a storm's coming this direction, I'm going to run the other direction. Or you have to go with a inferior insurer. So since those hurricanes of 2017 that we talked about, but particularly over the last 3 years, various insurers have emerged with no financial stability rating. So we might have heard of the term AM Best rating. So they're A-rated, AM Best, or S&P company. Pretty much all the companies we write with are A-rated or better. There are a handful of companies that are unrated. They couldn't even qualify for a rating, and they're not subject to any regulatory rules. So you could have your boat with one of these insurers. There's a claim, there's a hurricane, you file a claim, and they just say, sorry, we're out of business. And there's no recourse like there is for the traditional rated insurers in the United States. So most boats in the Caribbean and Bahamas are buying that insurance right now if they want hurricane coverage. It's just what's available. And there are carriers operating out of St. Kitts, Trinidad, Bahamas, BVI's, pretty much every island, American Samoa, Costa Rica, where you can buy this insurance. Is it good or bad insurance? I couldn't tell you. I just know it's not the same quality that we rely on in the event of something like insolvency. So we've got to be very, very aware of that concern down there. And I sometimes get asked, like for homeowners insurance in Florida, you can buy property insurance, and then you can buy a separate hurricane policy for your home, kind of combine the two. That doesn't really exist in boating. So you can't buy a policy that doesn't have hurricane coverage and then just a hurricane policy and merge them. There are some services that have come around in the parametric realm, which is really complicated, where if the wind blows and you're in this zip code and it blows for more than 30 seconds above a category 3, we'll pay you out X. It's not a specific hurricane coverage the way we're used to it in boat insurance, but that's about the closest you could get as a parametric product.
Wow, that's super specific. I'm definitely not familiar with those products, but good to know. And what can you tell us about the deadline and conditions for those survey recommendations compliance, right? So you write out a letter some of the time to say, well, we want to underwrite this boat only if you can address the following points from the survey. So it's very common that you have a couple sticky points that must be addressed, and you have to provide this statement that says these things have been addressed. And sometimes we run out of time. So what happens if you don't have the work completed in time for the insurance to be binding? What have you found happen in the real world?
Yeah, good question. Again, depending on the insurer, some insurers will give you 30, 45, 60 days from binding to address your recommendations. Some insurers require them to be completed before closing, which is not realistic and rarely actually happens, but some of them require that. And then depending on the survey itself, if there's safety or seaworthy items, you might have an insurer that says, we'll give you 60 days to address the recommendations, except for that one. You don't have a working fire extinguisher right now, or your through holes are faulty, your bilge pump has oil in it. We're actually not going to give you coverage until that recommendation one or two are addressed. So good things to get in front of when you're closing. But again, in marine insurance, everything is based on honesty and good faith. So we don't want all the receipts for the 49 recommendations and all the emails and invoices that prove that they're done. Everything comes down to one piece of paper, and there's 3 boxes to check: nothing completed, everything completed, or everything's done except for the following. Now, an insurance company is not going to go back and check, but if there's a loss, the one coverage that is excluded on every insurance policy is lack of maintenance. And so the easiest way to get stung by that exclusion is the surveyor recommended you do this. You said you did it. You didn't do it, and it caused a claim. What do you expect? And so no
That's
insurer
totally
is.
right. That's totally reasonable. Agreed.
So what could a boater do? Is you're not obligated to do everything necessarily. What a boater can do is say, and it helps when a yacht broker preps them on this when you're buying a new boat, is to have a survey recommendation plan. And you go, hey, before closing, we're doing numbers 1 through 6. Within the first 30 days, we're doing numbers 7 through 40. And anything after 40, that's kind of cosmetic. We'll get to it in the first year. Your agent can bring that to the insurer before they give a quote or during the underwriting process, and they agree to it, or they don't. Or the insurer says, we agree with that, but we really want you to do number 58 in the first 30 days. And you're negotiating with them. It doesn't have to be all or nothing. And so it's in the best interest of the client to actually have a plan. It shows the insurer you've thought this through. But the easy example I give is, because every owner and every yacht broker has said, do they really need to do everything? Some of this stuff is just cosmetic. What is the minimum that the insurance company wants them to do? That's never a question we want to ask the insurer. What's the least amount of repairs we need to do to a boat? But the example I give is, if a surveyor says, screw in the light bulb because there's a risk of electrocution, and you think it's just a light bulb, that's not a big thing. We can do that whenever we want. Kid sticks their finger in it, gets electrocuted. There's an easy lack of maintenance issue on something that was easy to fix, but we just didn't think it was important because we needed a new fire extinguisher. So are they all important? Kinda. None of them are important until they are, but that's where it gets difficult. And if you go to an insurer and say, we are going to screw in the light bulb in 6 months, and if they agree to it, you're good. You're
Okay.
good. If they don't, look for a different insurer who's more comfortable with your plan, or sorry, you got to buy a new light bulb.
Very good. John, it was really great to have you. Thank you for sharing your time, your insights with us. I know our listeners will find tremendous value in this, Q&A, and I will also link in the description below to your page on our marine directory, where buyers, sellers that want to talk to you about insurance can learn more about your expertise and perhaps have questions directed to you to help them in their yacht insurance matters. So thank you again for joining us. Are you coming to any big boat shows soon where we could see you?
We're at most boat shows. If anybody, including yourselves, are at the next Fort Lauderdale show, that's where our office is here in the Freedom Tower at the Bahia Mar above the fuel dock. But we just had Palm Beach. Next week, I'm heading out to California for the Newport Beach Boat Show out there. Kind of got our summer season San Diego show, Chicago, and then Cannes and Monaco into September. Newport, Rhode Island. We're pretty much at all of them. So we try to do the full circuit and serve our clients at just about all these shows.
Great. Well, we'll look forward to seeing you in person. Until then, you'll find us in the future episode of Full Displacement. Subscribe if you haven't, and we'll see you on the water. Fair winds.